Hello, welcome to the Financial Commercial Advisory Services Delivery presentation that I'm going to make to you today. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome. SMEs are suffering. They're suffering in a number of different areas in Australia and possibly in other countries around the world, of course. But looking at the Australian situation, we've got high interest rates, at least on the conditions for the last 20-odd years, high inflation, business uncertainty, business failures. The vast majority of SMEs require assistance in the financial commercial areas of business operations. Who gives them that advice? Just think about it, please. At the start of this discussion. If you were employed as an accountant in a business larger than what your current clients are, might be the same industry, what do you think you would do all day? What would your role be? Why don't you even stop the video now and get a blank sheet of paper and start writing down what you would envisage that your role would be. I'll give you some tips based on my experience as the Chief Financial Officer, Company Secretary of a listed public company. A fair bit of your time would be spent answering and then responding to the CEO and other members of the leadership team's what-if type questions. A lot of those questions related to costing issues. So I would sit down with my cost accountant and we would prepare answers to be submitted back to the CEO. Now, some days I would spend nearly all day, 8-10 hours, working on responses to questions of a financial and commercial nature from the CEO. Nothing to do with taxation. I don't think the CEO ever discussed taxation with me, other than to when everything was finished, he'd say, "Is it what you expected that we had to pay?" Because at some stage I'd obviously given him a figure and I had to be very quick to remember what I told him. But what I'm really highlighting is that businesses require a whole range of different information that you might not have struck in offering outstanding taxation services to your clients. Whilst taxation is important, the client obviously wants it done properly. They want to pay the correct amount, not too much, not over what it should be, not get themselves into problem with the taxation office. And that's very important. But they need to survive in business. There's a whole range of financial and commercial matters, many of which we're going to discuss in this presentation today, that are definitely not covered in taxation. So who is your client talking to? Who is your client ringing early in the morning? I had a lot of those calls too, because the CEO is about to catch a plane and he wanted to talk about something. He really wanted to have the answer by the time he'd flown from Brisbane to Sydney, or from Brisbane to Melbourne, or Brisbane to Townsville, or Cairns. This is how businesses operate. I know that SMEs have got the same worries as what the CEO of a public company's got. And the CEO of a public company is surrounded by a leadership team. In our instance, there were 10 senior executives. I was one of them, but the others kept on asking questions of financial, commercial, and in some cases, corporate governance, legalistic type issues. Who does your client raise those questions with? So the annual set of accounts and the tax return is not enough information to guide the person operating a business. And I think it's taken a long time for the Australian accounting industry to acknowledge this and face up to this. And some firms obviously have faced up to it. They're our subscribers. They're using the information that ESS BIZTOOLS produces. And I know there are other products out there and some people are venturing into this space. But I'd like to see the whole industry fully embrace that this is our key role. And with today's technology, today's software, today's communications, we can deliver a world-class system of supplying financial and commercial advice to SME clients throughout the year, not just as some byproduct of the annual preparation of a financial accounts, and it's a big event months after the end of the financial year, 17, 18, 19 months after the beginning of the financial year. There could have been all sorts of horrors created in those first 6 or 7 months of the year, and it's nearly a year later before it's all been reflected in the overall financial accounts. It's too late to correct anything. So we start off with the 52-week Business Enhancement System because businesses do operate 52 weeks of the year. Businesses don't have a holiday as such. They're not geared to work around a tax lodgement program. That's important. You've got to work around that if you're offering tax services. But when you're giving advice to your SME clients, we have to appreciate that every day is a new working day in their environment. And there could be a need for information to be supplied, for answers to be given to questions every day. And just as larger businesses employ full-time accountants or chief financial officers, SMEs need a component of that intellectual input throughout the year. The intellectual input from an accounting professional is very important because a lot of the financial commercial matters that we're going to discuss in this discussion are centered around the accounting department in larger organizations. And in the SME community, that is the accounting firms who are prepared to offer a virtual CFO service, which I hope to be able to convince you to do so. The 52-week enhancement system acknowledges that business operations do continue week in, week out throughout the year. It starts with the due diligence review. With all due respect, I think if your role has been traditionally to prepare the annual accounts and the tax return, you do not have a full appreciation of what really happens in your client's business. But if you're going to be the virtual CFO, you will need to come to grips with an understanding of how everything operates within the business. Otherwise, there's going to be some problems. So you need a clear understanding of the business operations. The first thing to look at is the internal control points. Review them. Make sure they're reviewed again every 6 or 12 months and every so often spot checked, because that's vital to make sure products not being inappropriately treated, that costs are not being inappropriately incurred. Who's got the delegated authority to buy products, to employ people, to authorize new customers to have a credit account, to decide whether a customer or some other business you're dealing with should be registered on the Personal Property Securities Register? Who are the suppliers to the business? Where are they located? Yes, location's important when you're sitting in the hot seat helping your client run their business. Because if your client's importing raw materials or even finished stock items from countries around Israel, Syria, the Middle East, or in Europe, around Ukraine, which has been invaded by Russia. Supply chains can have some difficulties in delivering. So what does that mean? Is the leadership team saying we're going to have to increase our inventory of raw materials or basic stock items that we're bringing in because we're fearful of what might happen on those supply chains, because ships are now being diverted around the Cape of Good Hope, and that adds 2 to 3 weeks to a voyage, but some of the ships are not so keen to be going on those routes in any case. And therefore, we need to build up our inventory in Australia. We used to hold 2 months supply. Now the leadership team is wanting to go to 4 months. But what's that extra investment? It might be an extra $300,000 or $400,000 investment. And what's the payment terms to the customer? The supplier. Is the supplier still going to want to get paid? I imagine they do. So what's the cash flow impacts of this? But the supplier could be another part of Australia that has had weather problems, floods, cyclones, extreme heat, which has reduced their production capacity. These sort of things can also affect. So this is why you need to have this in-depth knowledge of the suppliers and where products are coming from. And what's that likely to do to the financial forecast? Who checks the stock in? By whom? And where's it stored? What's the accuracy of the stock recording system? Can you rely on it? Or is there problems with it? Who authorizes payments? Who's got that authority? Or can anyone just go and buy things? I've seen that in some businesses, mainly smaller businesses. And remember that the larger your client, the other businesses we're looking at, whether they're public companies or not, there may be auditors involved. There may be an internal auditor. In most SMEs, you haven't got those controls either. No auditor, no internal auditor. So you need to have a clear understanding of what's happening. Who are the customers? Where are they located? Does anyone ever get any information from the customers? Who listens to them? Who sits down and talks to them? Is there a customer advisory meeting? Who coordinates that? In some instances, I've seen sales managers aren't that interested in customers' advisory meetings, but I think they should be. And your client is probably very interested in hearing what the customers have got to say. Perhaps that's another role you need to undertake. But as part of your due diligence review, you would be reporting back to your client of what you heard and observed from customers. Debtors system. Who is responsible for it? Who authorizes credit accounts? Do we just give credit accounts to anyone that asks for them? Or is there an application form that's then checked and vetted and the form gets passed on to a senior manager who then decides whether to authorize opening an account? Is there a understanding of the Personal Property Securities Register and the need to at least consider whether a new customer should be registered on the Personal Property Securities Register? It undoubtedly depends on the estimated quantity of sales over a period, but should be looked at. Has anyone informed the person responsible for debtors the importance of the debtors days outstanding figure, making sure it's one of the key performance indicators that's used in this business? Because I found over the years that a lot of people do not understand what the debtors days outstanding figure indicates. I had a situation where in the presentation of a corporate governance workshop in a very big mining town in Queensland, someone asked me what their debtors days outstanding should be. This is in an audience of 40 people, where they're talking about corporate governance. And I'd mentioned that directors should make sure they know what the debtors days outstanding is each month as part of their performing their director's role. And then this lady asked this question. And I said, well, what's your debtors days outstanding? She said, I don't know. And then she said, how do you calculate it? I said, what's your position in your employer's business? She said, I'm the office manager. So here's the office manager saying to me, they've got no idea what the debtors days outstanding is. They don't know how to calculate it. I said, doesn't your accountant talk to you about this? No, our accountant only does tax. I said, okay, righto. So I looked down at the back of the room and I could see the caterers were getting ready to serve morning tea. So I thought, well, now's an appropriate time to have a break. So we'll break for a quarter of an hour and have our morning tea. So I went over to this lady and I said, can we have a discussion? Oh, yeah, I'd love to. I said, well, what are your figures? And she gave me their turnover and gave me their debtors balance. As soon as I saw the two lots of figures, I was, gee, 102 days was the debtors days outstanding. She didn't know. I said, who owns this business? She said, my father. I said, oh, okay. Does he get a bit worried about the debtors? Oh, he gets very cranky. And after the bank manager rings him, he gets crankier. And I said, and he doesn't talk to the accountant about this. She said, oh, he's rang him a couple of times, but he's a bit non-committal. He's only worrying about the tax side of things. So this is the problem. 102 days in debtors, no idea. I said, yeah, does your father have some money problems or all the time? We've got no money. Got all this money owed by the debtors. What are you doing to chase it up? Oh, no one's doing that. So this is, to me, it was a real life situation. All this is getting played out in a corporate governance workshop. Actually, I got hired as a consultant to go into that business, and we substantially reduced it. We got it back down to around 60 days fairly quickly. And then by working very hard, they got it around 50 days. Put a lot of money in the business. Think about it. Risk management and potential problems. Let's think about them. What are they? What are the risks in this business? You don't normally get asked this when you're doing the tax return, but it's pretty important for the business. What are their strategies? We've all seen the problem that COVID-19's caused. I don't think it's gone away. I had COVID last week. In fact, I'm still suffering from the aftermath of it. It's still there. I hear that people are in hospital with COVID. It's just not hitting the headlines, but it's still there. And what effect is that having on some of your clients' businesses? Does the team know the strategies there for risk management? In ESS BIZTOOLS, we've got a full program on risks that can confront a business. And the saying that I've got from this, which I got from an American colleague, your knowledge will need to be an inch wide, but a mile deep, not a mile wide and only an inch deep. You need to have this clear understanding to give this. And the next thing we then move into, we've done the due diligence review. We're now ready to do a business plan. You now understand the business. Not quite like the back of your hand. It might take another year to get that knowledge, but you'll be a lot better set up than what you might have been. Business plan's a vital document. And I think it should be prepared and reviewed every year. And it should be developed in conjunction with the leadership team. Most definitely not on the basis that you go off and prepare a business plan and a week later come back and give it to the client. That's a waste of time, in my opinion. The leadership team needs to be involved in the preparation of the document because they need some ownership. Their fingerprints should be all over it. Your role is to coordinate it. Sure, make some suggestions, but at the end of the day, they have to adopt it. I think they should all sign it. Sign off in the business plan when it's finalised. And then at each month, they should be reviewing the action plan in their monthly leadership team meeting. Remember, it is their responsibility to implement the business plan. If you're working as the virtual CFO, you'll be part of the leadership team. You'll have some role in all that, but they need to own it. I've seen situations where business plans have been just prepared by an outside consultant, brought back in, dumped in front of the leadership team, and they just yawn and say, oh, yeah, so what? No inclination at all to implement. We need them to implement. And the action plan is very important. I've already mentioned it. Make sure everything that's going to be done in the future is clearly then identified in the action plan. When it's going to be done, by whom, by when, of course. And then every month at the leadership team meeting, review it. It needs to be a living document that's continually getting brought back, not thrown in the bottom drawer and forgotten about. If that's going to happen to it, it's a waste of time preparing it. And then we move into predictive accounting reports. And now this is the financial interpretation of the business plan. And that is the process as I see it. Due diligence review, business plan, and then we do the predictive accounting reports. Not in any way, around the other way, as I've seen some people try to do it. They've done the budget first, then try to do a business plan. The business plan should be outlining, this is our strategy for the next 3 years. I think 3 years is far enough to go into the future with an SME business also. I think otherwise you're really getting into uncharted waters. I think there should be an individual budget for each operation. If your client's running 3 retail shops, a warehouse, a delivery type service, and an office, each of those activities should have a separate budget, a separate profit and loss account, so that it can be properly evaluated. If you put it all together in a consolidated P&L and a consolidated balance sheet, you lose the advantage of being able to drill down into the performance of that particular activity. And this is the way the big end of town do it. When I went to the public company I was involved in, and I ultimately ended up the chief financial officer, we had a few 500 odd business activities all over the place. They all were treated as individual businesses. Sure, at the end of the year, when the report was finalised and announcements were made to the stock exchange, it had all been consolidated. But at the very beginning, it had to be isolated into the individual business operations. Why? For accountability back to whoever was the manager of that little business. So then we have individual budgets for each operation. We need to have the key drivers of the major sub-accounts. Now, this is things like the raw materials inventory, so we can look at it. It might be the completed stock on hand, the debtors, the creditors, capital expenditure, research and development projects if the company's doing any, export market development expenditure plan, all those things which are key items. I don't think should get hidden in the budget cash flow forecast, which they can be, but broken down as the key drivers. So they've got their own separate account that you can then analyze. Look at how much money's tied up in the investment. And realize that every time an extra dollar gets committed there, it's probably going up in the cash flow forecast, unless you've got a very good relationship with suppliers, and that case would mean creditors is going up. And then we can move into the cash flow forecast. You should be very familiar with the cash flow forecast. Understand that if money's been spent in certain areas, which we just went through the major components, other than the day-to-day business operations, it's going to be reflected in the cash flow forecast. So what future scenarios could emerge? Because the leadership team's got some fear of what's happening, are they increasing the stock holdings? And is that having an effect into the cash flow forecast? So does that mean that the business may have to raise some additional funding? If so, where from? Loan funds? Sure. go to the bank and borrow some more money, but is the bank manager going to be sticking out his hand for another title deed to take security for the additional funds? Is the title deed available? Or is it a time to think about raising capital from the public, because private companies can do that now? And does the leadership team understand this? That they can raise money, such as an early stage innovation company. Now, this will have to be a young company to do this, basically primarily under 3 years of age. Some companies up to 6 years of age could qualify, but that's the limit. And then the turnover in the previous 12 months has to be under $200,000, not including any accelerating commercialization grant. So we're looking at small turnovers, and expenditure has to be under $1 million. And the company primarily has been involved in research and development or other innovative activities. But crowdsourced funding equity raising can apply to any type of company, subject to its turnover being less than $25 million on an international basis, the gross value of assets being less than $25 million worldwide, and the company is not listed on a stock exchange anywhere in the world. Well, does that present some opportunities? Because the company could raise up to $5 million in a 12-month period if they go through the process. Now, you're going to have to educate them on the process. They're going to have to find out about the crowdsourced funding intermediaries, what their duties, roles, and responsibilities are, and how the whole process works. But in ESS BIZTOOLS, we've got all the package to show you how to do that. So let's move on. Daily reports. I mentioned that earlier, that businesses rely on knowing what's going on. Now, the big end of town definitely do, but does your SME clients? A one-page summary. That's all it needs to be. It's not a huge novel. One page. It might have key information like the bank balance and what receipts are anticipated this week, and payments. What are the big payments to be made? Does it mean that someone's really got to get on the phone or into the car and go out and collect some money from debtors? And that's one of the reasons it's such an important document. But it could also include yesterday's sales, number of customers, average sale, gross profit percentage, all that type of information. And then we turn to the weekly performance reports and profitability estimates. It's a very important document prepared for each business operation. It's prepared on the Monday or Tuesday. Thus enable management to review the results, to decide whether they're happy with them or not. And if it's below the expected result, an inquiry can be started. Why? What caused this? Have we recorded everything properly? Let's re-examine what's happened. Did someone not get the memo to say to increase all the prices by 14% or whatever? What it enables is the management team to immediately take action. This is what happens in the big end of town. This is how they manage businesses. Not leave it for what could be nearly 12 months from the beginning of the year, or it will be, or longer, to review. Unfortunately, SMEs don't get much exposure to weekly reports because the accountants who are preparing tax returns are not involved in this. I think you should be. And if you're going to be offering a CFO service, you must be to help your clients. So the taxation return is not assisting the financial or commercial operations of the business. We then turn to the monthly financial accounts. They're prepared for each individual business operation again, so they can be compared back to the budgets, and they're not consolidating. At the end of the year, you can consolidate them if you wish. You might do that for taxation purposes, but it's definitely not needed for the ongoing management of the business. They need individual accounts. I don't think it's a good idea to take shortcuts. You need to get the correct information to enable a proper analysis of what's actually happened. And the comparison to budget can be very enlightening. Then you can prepare a monthly report to go to the board of directors or the board of advice, analysing the financial performance, analysing and identifying any potential problems in the future. These might have come up in the cash flow forecast, as I mentioned before. And this might mean that you really have to highlight that there needs to be some capital raised. Your key role is to be the future advisor, not the recorder of past history, which tends to be the role for taxation purposes. You're out there pioneering with your CEO, answering the what-if questions, preparing costing reports to identify where the business might be headed. And next month, then, well, the process is repeated. This is what happens in a business: daily, weekly, monthly. So all this is incorporated within the ESS BIZTOOLS product packages to assist you to offer this type of advice to your client. So where is the 52-week Business Enhancement System? Well, in our intro package, it's shown as an introduction, an overview, so that if you're an advisory intro package, you're given some information on it. The starter package has got a detailed overview. The advanced package has got a full implementation, full checklist of everything we've talked about. And obviously the financial forecasting package has full implementation together with the Chief Financial Officer role. That's how we've introduced it into the system. So are you interested in getting started in delivering these types of services to your clients? I really hope you are, because this is what the SME market needs. There's a lot more we can do. So we have a special Christmas offer available to you until the 23rd of December. And to find out more and to subscribe, but even to find out more, of course, to start with, just go to www.essbiztools.com.au and click on packages and pricing. It's there. And then click on the product package that you're interested in. And you can see them all there. You just play around with them. And what you will see is we have a huge discount at present, a 50% discount on every package, excluding the financial forecasting package, where there's a discount of 33 1/3, because we've got third-party products included in the financial forecasting package. We have the Plan Guru budget cash flow forecast software, and we have training by Paul Barnaby, fellow of the Institute of Chartered Accountants, on the utilisation of the Plan Guru software. So that's the deal that we've got available. It's available until the 23rd of December. I hope that you will go to our site and have a look. If you've got any questions, please contact us. You can send me an email, peter@essbiztools.com.au, and I will get back to you. Or you can telephone us on 0747241118. Merry Christmas from the whole team at ESS BIZTOOLS. And I trust that 2025 will be a great year for your firm, your clients, and your team. Have a great Christmas. Goodbye.